If you are leasing land, office space, water, or even an apartment, you'll want to ensure the property isn't sold out from under you. This is where the right of first refusal comes in. And in today's video, we have the top things you should know, as well as a case study at the end. Number 1. What is the right of first refusal? The right of first refusal, or a ROFR, is a contractual right to enter a transaction with a person or company before anyone else can. Number 2. How does a right of first refusal work in real estate? Well, the holder has the right, but not the obligation, to buy a property or renew a lease at the end of the ROFR period, and they pay a fee for this privilege. During the ROFR period, the property owner cannot lease or sell the property to anyone else without first asking the right holder and having them refuse it. Number 3. What are the advantages of a right of first refusal? Well, for the buyer or the tenant, it gives you options. Say you are a commercial tenant leasing a space. You don't want to buy it right now, but you also want to make sure that you have long-term access to that space. In this case, the option will let you rent the property, but it guarantees that it won't be sold to someone else either during the lease term or at the end. For a seller, the primary reason you would tie up a property in this way is that it can entice interest either from current renters or future buyers and renters. Number 4. What are the disadvantages of a right of first refusal? Well, the right of first refusal primarily benefits a buyer or renter, but there are still some disadvantages. If the landlord decides that they are taking the property completely off market, even if you have a right of first refusal, you may not be able to either renew the lease or buy the property. And a right of first refusal can sometimes be financially disadvantageous. For example, if there is a set purchase price or lease rate in the ROFR, it's possible that the market will have changed in such a way that by the time you go to exercise the right, that rate will be higher than market. For sellers and landlords, on the other hand, a right of first refusal does have some problems. For one, you're not guaranteed a sale or lease renewal because the right holder doesn't have to exercise their right. But the biggest downside is that you can't entertain other potential buyers or renters. So if you have a set purchase price or lease rate in the ROFR and the right holder wants to move forward, you have to honor that rate, regardless of what others may be willing to pay. And number 5, what are the key things you should consider with a right of first refusal? One big consideration is the time period. How long does the right holder have to exercise their option? Another big question is, how much will the right holder pay for the ROFR? Another key sticking point is whether the ROFR is going to stipulate the future purchase price or lease rate now, or whether that will be negotiated later once the right holder wants to move forward. And if you are stipulating a price now, what is a fair way to set a future rate? And finally, another major thing you want to consider is whether the right holder can transfer their right to a third party. So that covers the basics of a right of first refusal in real estate. And with that, let's look at a short case study. The Wolf Creek Golf Course is one of the top courses in the United States. But it has a problem. Its green opulence is located in Nevada, one of the driest states in the US. So it needs water. A lot of it. Thus, in 2011, the Wolf Creek Golf Course entered into a lease agreement with the Virgin Valley Water District to lease 155 water shares in the Mesquite Irrigation Company that the water district owned. These shares would entitle Wolf Creek to about 1,100 acre-feet of water per year, which, for comparison, is roughly equivalent to the water needs of 3,300 residents. The initial lease period lasted through 2019, at which point the rate could be renegotiated. Wolf Creek, of course, is eager to ensure its perpetual, or at least very long-term access to that water. So it also requested a right of first refusal to continue leasing its shares after January 1st, 2020. But there was one problem. What if the water district decided not to keep leasing its shares, period? At the time that the water district acquired its shares, it did not have the capacity to treat the water that came with those shares. The purchase at the time was seen as an insurance policy, a way to ensure that water would be available if and when the aquifer that provided water to Virgin Valley residents ran dry. And once the water district built a water treatment facility, it planned to begin using the water itself. And for this reason, the district saw the continuation of the lease after 2020 as subject to its making the water available for lease to begin with. Wolf Creek, however, assumed that the right of first refusal gave it a perpetual right to keep leasing the water so long as it elected to do so. In fact, it even took out a $1 million loan under this assumption. So what happened? Well, the water district did decide to renew the lease, but it upped the rate substantially, and Wolf Creek took them to court. However, this case study does highlight one important fact. Don't assume that your right of first refusal is a guarantee. Just because it binds your landlord to offer you the right to purchase or lease a property before anyone else doesn't mean that the property will be made available. So if you need to guarantee access to a particular space or resource for the long term, it may make more sense to buy it outright or come up with a contingency plan. But what do you think? Do you have any stories about the right of first refusal? Let us know in the comments. Did you like this video? You're going to love our Gokce Land Due Diligence program. We'll make you a land due diligence expert in just 7 days. Check it out at gokcecapital.com/glad. And while you're at our website, don't forget to explore our $1 down listings at gokcecapital.com/listings. Finally, please like and subscribe. So thank you for listening, and more to come.